Welcome to Sachs Realty's Tuesday Night Podcast, where we talk about anything and everything real estate. Each week, we deliver expert information enabling you to make better informed decisions while keeping more money in your pocket. If you're interested in real estate, this is your show. All right, let's go. We are live, and it is Tuesday night, guys. The second Tuesday night podcast of 2023. We have a great show lined up. We have a great guest, a returning contributor to our Sachs Realty's podcast. And when Austin was on our show the very first time, I think we just started. And man, we're going to have some fun tonight. So much is going on, guys. But 2023, I don't know about you, but I've already written 2022 about 100 times. I was even writing a couple of addendums over the weekend. And I was like, man, I got to send those back to you guys because I didn't use the little automatic calendar thing and putting in some dates. But anyway, guys, welcome to our show. Austin, so good to see you, man.
No, 100%, man. I'm excited to be on here today. Appreciate the opportunity.
So much is happening in your life. I follow you guys. We're going to drop all the links for Austin in the show notes. He's a great one to follow. He's a young entrepreneur, very, very successful at what he does. He helps so many people. He's an employer. He's been at this real estate, business of his for quite some time, since he was so young. And now you're living what? I mean, you're in Miami?
Yeah, so born and raised Columbus, Ohio, moved to Fort Lauderdale about a year and a half ago, was renting and just bought a house a few months ago. So it's officially official.
Officially official. You are a Floridian.
Enjoy it.
Well, that's awesome, man. Well, tonight we're going to talk about Austin. It's a real hot topic. And, guys, I mean, Austin's a good guy. We're going to hopefully learn a lot from his experience, his expertise as a real estate investor. But I know real estate investing is a hot topic in the news right now. We just posted a video on Saturday. In fact, I don't know if it was maybe even suppressed a little bit. I don't. Our views usually do a lot better than this video, but we don't get political on this show, but it did have some political undertones, not intentionally, but it's just the news. Yeah. And one of the things that Austin and I are going to talk about tonight and hopefully get your input on is this ban that, there's so much that's been happening in the real estate industry. As we know, guys, I've been in this business since 1989, but as we know, the housing business has been out of control, and prices, unaffordability for so many. And, money was cheap and now it's not, and prices are still high. We're seeing some adjustments, but not enough. And, a lot of what the news is kind of turning to right now is blaming real estate investors for one of the reasons why the housing market is overpriced. And, I don't think it's so much. Look, I've been a real estate investor for years. I have rental properties. I mean, it's no secret. I talk about it on the show. Austin, he's a landlord as well. I don't really know, guys, and you'll let us know tonight what the difference between what we're going to talk about here on should real estate investors be banned. I'm not talking about ones that are providing a service. I think what Canada has established that so much of their land was being purchased by foreign investors, people that weren't residing. And this new ban, they said, for 2 years is going to ban most investors. So it's not going to ban people that aren't Canadian citizens that are living in Canada. It's not going to ban refugees. It's not going to ban students. So, I mean, there is a limited, there are exceptions to this law, but there was also a law, and we'll dive into it in a little bit here, guys. There was a law that was actually presented to the House of Representatives here in the United States in January. I think it was January 12th, 2022. There was a similar style ban that was talking about the impact of investors in real estate. But Austin, so Austin and we're going to try and set some things straight. I hope on, what we do. And there is a place for real estate investors here in the market. But Austin, just kind of, I mean, that's a lot to unpack, man. Austin's probably like, man, I don't know whether I want to say anything at this point. So, I mean, what's going on with you, man? Just let's start by, seeing what you've been experiencing with the current state of the market. Let's just kind of unpack that first. And then we'll kind of talk about, what you're seeing on the rental market side of things. And then we'll get into some of this hotter topics about should investors be buying properties. So,
For sure. No, 100%.
Yeah, let's take it away. What are you seeing out there right now?
Yeah, I mean, as we all know, the last few years, had like one of the biggest runoff for me, definitely the biggest runoff. I don't know about, 100 years ago, but it was prices went through the roof very quickly, 10, 20, 30, 40, 50% appreciation, which is insane if it continues at that rate. So, all markets are cyclical. They go up and then they go down, and then they go up and then they go down. So inevitably this was going to come. I think, some markets have already, maybe taken a 10% dip. It's TBD to see how much more, those things actually go. But it's definitely a different market than what we were in, 9, 12 months ago, drastically different. So, houses are getting harder to sell. Prices are coming down a little bit. I still believe good products are still great in this market. We just listed a house last week, had like 25 showings in 48 hours. So, certain properties, certain areas are still great, but the market's definitely changing for sure.
Now, just so everybody knows, I mean, just kind of tell everybody what your role is in the industry. I mean, you do a great service by buying distressed properties and fixing them up and flipping them and reselling them. And you do a really nice job on that. Sometimes flippers, they get a bad rap, because they lipstick on the pig kind of thing, but just kind of give everybody about, what you do daily, what percentage of your business is, investing for resale, and what percentage of your business is rentals.
Yeah. So when I first got started in real estate 7.5-ish, 8 years ago, I got into real estate wanting to build wealth, which is through ownership, which is through rental properties. But then I got caught up. I was broke, so I needed money. So at the beginning of my career, for the first 4 to 5 years, it was probably 80%, flipping houses, renovating and selling. And then, 10, 20, 30% renovating and then refinancing and keeping as a rental property. So did that for many, many years at the beginning. Over the last few years since then, it's kind of inverted. So we've been, buying, renovating, and refinancing 70-ish% of our deals. And then, buying, renovating, and selling, the other 20 to 30%. So the goal now is to own rental properties long term and not flip, as much. But, the different deals require different exit strategies.
So how many doors do you have currently?
Just about 100, just under 100 doors.
Yeah, 100. I mean, that's a good amount of properties. Now, are you still primarily investing in Ohio, or where? I know, that was where you were kind of deep.
Yeah, so that's where all my properties are. We've wholesaled in a couple other cities years ago, but anything I've ever purchased has been in and around, Central Ohio, Columbus, Ohio.
What are you seeing as far as tenants? There's been a lot of news where people are saying, rental properties are expensive, rents have gone up. Are you starting to see where tenants are starting to push back on rental prices?
Yeah. I mean, just over the last few months, things have slightly been changing in the rental market. Up until then, I mean, you could rent anything in a matter of a couple of days, at rental prices that I thought it was crazy. My management company would say X. I'd be like, how? So, it's definitely changed since then. It's taking a little bit longer to rent properties. So instead of, leasing a property in 3, 5, 7 days, it might be taking 7, 14, 21 days to find a good tenant in there. So, timeline for sure has been extended. Rents coming down, maybe $25. We haven't seen a drastic decrease yet. But again, that the thing with real estate in any economy, real estate's a lagging indicator. So like when things are going up, real estate is lagging. When things go down, real estate is lagging. So I think we're still figuring out that lagging period. And it's still TBD to see what happens. Like this may be the bottom, or we might have a whole nother bottom to go. So, at the end of the day, if you have cash flow, lack of cash flow is the only thing that bankrupts people and bankrupts companies. So as long as you're, investing correctly and having cash flow coming in, you're going to be in a good position. But there's a lot of variables in play in today's market for sure.
Yeah, and a lot of guys, what Austin's talking about and lagging, especially in the rental side of things, most of these people are in leases. So, if we're seeing rent prices, current market prices adjusting right now, it's kind of hard to get an idea on the rental inflation because it is a long-term kind of thing. In order for a lot of tenants to drop their rental cost, in a lot of cases, they have to move. Their landlord may be pushing to even raise the rents because a lot of the costs are increasing. But in order for that rented inventory to show signs of prices declining, you almost need to see a turnover in, tenant placement, which isn't really good. Are you having a hard time getting paid? Are you seeing delinquencies in the last couple months rise?
Yeah, I mean, we've had a couple people that said they couldn't pay due to a loss of a job. We can't verify that, but I would assume it's accurate because that's what's happening in the world right now. So a couple people, again, nothing that's like setting off this massive alarm bell, but it definitely is something we are seeing. And I think it's already happening. People will go back to like bunking up, moving in with a friend, maybe moving back in with their family. Which, if you look at supply, market economies are all supply and demand. So if you look at the supply and, it was 100% and then 20% of people start bunking up, demand drops. And then supply may even be increasing right now because people that were selling a house, trying to sell a house can't. So then they turn it into a rental property. So supply increases, demand potentially slightly decreases. Then it's TBD on what that'll do to the market. But like you said, it's a 6-12 month indicator because there's leases, there's all types of things still in play. Real estate can't just change overnight.
Yeah, and a lot of it, I mean, we're seeing headlines now where these builders are starting to turn their communities into rental communities because they can't sell because the prices are so high. A lot has are you familiar with the ban that Canada has placed? I mean, have you heard about that?
Very, very briefly, but I think it's in foreign investors or something like that.
Yeah, yeah. So they were saying that there's a huge demand for housing, single family housing from out of the country investors. That I mean, a lot of it is they can buy property in other countries cheaper than they can buy it in their own. And, the same thing, I mean, is happening here in the US. I mean, some of these markets, Austin, we're seeing where like 30% of the houses being sold were being purchased by investors and not people like you or me, but big companies, right?
Yep.
And, REITs, Wall Street type companies. And I'd like to talk about get your opinion on that because, this is kind of like a new thing. I was having a conversation today with somebody and we were kind of talking about the way everything has kind of evolved over the last 100 years. And, I mean, you just take like medicine, doctors, they're being bought out by large conglomerates, right? I mean, there's very few independent practicing doctors, they're joining these big groups, insurance is big business, pharma, big business. I mean, everything's kind of turning into these Goliath style businesses. And the only thing that I think hasn't really been taken over yet it's like the housing industry of the major markets, right? And when we look at it and we say, well, homeownership, the pressures right now is so, hot for I mean, prices are high, financing is high, not in comparison to mortgage rates over the last 4 or 5 decades, or even actually since the 1930s. FHA started in 1934. I think mortgage interest rates were 5.5%. So, all through the history of time since the 30s, this is not 6-7% is not terrible. But when you look at the home prices, it is. And so much has happened through the years, like red tape and being able to build. And we're not seeing affordable housing being built anymore and all this stuff. And then you've got like the World Economic Forum that says, rent and be happy, right? Own nothing. I mean, do you think housing will ever be the same? Do you think we're ever going to see like affordable housing? Or do you think this rental trend, with billions of dollars sitting on the sideline now, just salivating, waiting for the market to crash and jump in and gobble this inventory up? Do you think we're ever going to see a housing market where, there's the dream of homeownership for American people?
For sure. I mean, it's a lot to unpack. I've ran a lot of numbers on single family and multifamily development on properties that I own or looking to purchase. And it's basically impossible to build, even if you get the land for free, it's impossible for the cost of building to build something that isn't A class, which means, top of the market type rents, because you need more money coming in to cover the expense of building. So I definitely agree with you there. It's something that's becoming more and more difficult with the price of, labor, the price of materials, the price of construction. And I mean, the only way to get around that is some sort of credits from the city, but then that causes a whole different, problem. So it's a very tough, problem to solve because things are so expensive right now. And as far as, like hedge funds coming in and buying up everything, I've been in the game about 8 years. You've been a lot longer than me, but I really didn't really hear about hedge funds until 3, maybe 4 years ago. Before that, it was a foreign thing. I didn't even know what they were. But then they came in and they literally buy everything. They're buying cash. They can pay more than everybody else. So everybody's selling to them because they want to make money. I was even doing it, when I was flipping and wholesaling a bunch, I was selling to hedge funds, making 10, 20, 30, 40 grand thinking I was winning. And then I look back 2-3 years later and properties have gone up $100,000 each. Like they're the winners. You know what I mean? That's one of the big reasons we started owning rental properties instead of, wholesaling them or flipping them. So as far as do I think it's going to continue? I don't think it can be stopped unless some type of legislation comes in. I got an email today. Most hedge funds backed off over the last 6-ish months. I got an email literally 3 hours ago. And it said, we are back in the market. We're trying to buy 3,000 houses in these counties in Ohio in 2023. And, they said they can be all in for 80% of ARV. So, kind of aggressive, probably not what we've seen, over the last few years, but they're back, right? So I think it's an inevitable thing that they're going to continue to buy. Multifamily is already, mostly funds and big money. And single family is the next thing to go. So, do I think the dream of home ownership will be impossible? No. Do I think there'll be more hurdles in the way to get there? Potentially, for sure. So, and I mean, that's why you and I talk so much about own real estate. You can either try and fight them or you can ride the tide with them.
I think my thought is, and I think that this is a scary part. I mean, now I think we can agree we hit a tipping point probably in April or May, depending on what market you're in 2022. We kind of hit a tipping point of the real estate cycle, and the real estate cycle happens every 18 to 20 years. We go complete circle. So prices going up and down. You had said that early in the show. That's nothing new. Yes, prices go up, they come down. But over the last, since 1930s, when the FHA jumped in, and I mean prior to 1930, the average mortgage was 5 to 6 years and was interest only loan. Wow. And they had to put 50% down. Wow. The home buyers. And, there was a lot of default. And, after World War II, there was a big problem and there was a demand for housing. FHA was created, stepped in, And then basically what they did was extended the mortgages to 20 plus years, fully amortized loans, making an affordable payment. But since then, the 1930s or so, we saw appreciation of housing pretty much every single year, despite the different types of inflation, recessionary times, until we got to 2008.
Yep.
Right. So the tipping point in 2006 taught a lot of home buyers that a home isn't necessarily an investment. Right. And I think that was a big lesson for many people, because some people that bought in 2006 at that peak still until this past year could not sell the home for what they paid for it back in 2006. Austin, I think we're in that situation now, where people that bought in 2022 or maybe even 21, maybe so far underwater that it could be another decade or 15 years before they will see home appreciation. So I guess the question that comes to a lot of the younger generation is that a risk that I want to take? Will it be known that home ownership becomes more risky than not? Because if they have to sell, man, it's not such a good deal that if they lose $50,000, $60,000, right? Even if they put a lot of money down and they don't have to come to the table when they sell, it still sucks to sell for less than what you bought for. So I guess that's my thought is, will it ever be the same again? Will we ever get into like a normal market? Because I think, like you said, these hedge funds and these big investors, man, they have so much cash. They can ride the tide, man. They can just kind of, where you and me as an investor or a landlord, I mean, our margins are so thin right now. I mean, if you make $500 in cash flow a month, $6,000 a year, and you get a bad tenant and it turns over, it could cost you $20,000 in repairs and maintenance. So, how are you competing with that? And where's your head in thinking, like, is this a good market to be in? Do I want to be in single family rentals? Austin, does Austin want to be in single family rentals and compete with these Goliaths?
Yeah, I mean, I do. Personally, real estate's been good to me. It's made a lot of money. It's what I know, and quote unquote, real estate's created the most millionaires ever. There's definitely a right way and a wrong way of investing in real estate. I believe there's opportunity in every market, as long as you can move with the market. So, a lot of people are doing, creative financing. A lot of people are doing subject twos right now. A lot of people are getting interest only loans right now. I think when you mentioned, FHA and stuff, I'm pretty sure they're even discussing a 40-year term instead of a 30-year term now, which could make things quote unquote more affordable because the payment would come down. So I don't think real estate will ever, be a bad investment if done correctly. There are bad investments, and I've made some, so you can do it wrong. You can lose money. But if you're doing it correctly, you're buying them right, you're buying it with cash flow, you're buying it with some equity already built in. I'm in, like, I'm in the game. I'm buying houses because, to me, I didn't go through 2008. You did. You may have some insight on this, but I was 14 years old at the time, 15. But every single person I've ever met, not a soul has ever said that they wish they would have bought less real estate in 2008, 2009, 2010. Everybody I know says that they wish they would have bought more real estate. So, nobody can time the market. Is right now the perfect time to buy? Maybe, maybe not. Do I think there's definitely opportunities coming over the next 12, 24, 36 months? For sure, 100%. So I'm curious to hear your thoughts on, I didn't live through 2000. You did.
Yeah, man. Well, let me tell you, I bought houses in 2011, 12, 2000, really, I guess we started seeing the major blood in the streets probably around 2009, 10. By 2012, they were bundling foreclosures up and selling them to Wall Street. That was pretty bad. We had
happen again too.
Neighborhoods where, you had properties that had grass that was 2 feet tall. Banks had to hire, grass cutters, and all kinds of, jobs were created as a result of the fallout. But yeah, I mean, I was buying single family houses for $40,000 and $50,000 that were in rural neighborhoods.
That's crazy.
And, I was flipping them. And at the time, I wish I still had those houses. I just saw on, I was looking for a property search for one of my clients, and I just saw one of my products resell for 2.5 times what I sold it for in 2017.
That's great.
So, yeah, I mean, it was, but the thing is, Austin, we're not buying them now. We're buying them in the peak.
Yeah.
So, I mean, a lot of it's going to be, I'm sure you're seeing where your insurance payments are going up. Insurance is going through the freaking roof. I just had to switch carriers that I've been with for 20 years because my rental properties that are renewing, the rental rates, the insurance rates are so expensive. That matters.
Yeah.
We're just getting assessments, tax assessments. I've gotten 40 calls in the last week from people saying, should I fight this tax assessment that's going to phase in over the next 3 years? It's like, good luck. How are you going to do that?
Yeah.
But you had mentioned legislation. I do want to just kind of bring up, because this was I found this by mistake, Austin. I was doing some research on this Canadian law that they just passed.
Mm-hmm.
And I found this bill, HR 6383, and it was presented to the House of Representatives on January 12th. And guys, if you're watching this, we'll drop it. If you look at last Saturday's video, we do have this link in the show note. You can read this bill yourself. There's some interesting parts to this. Section 2 of this, and this is the United States here, by the way, guys. This isn't Canada. Section 2, it says Congress finds foreign investors now account for almost 1/3 of institutional investment in single-family rental homes in the United States. This increased the price and makes it more difficult for Americans to purchase a home. It goes on to state that 47% of rural renters pay 1/3 or more of the income in rent each month, that the federal government has done nothing to help rural Americans deal with the rising costs in housing. It goes on to say that current United States laws are designed in a way that makes it more profitable for foreign investors to invest in property in the United States than in their country of origin. And so I just thought, I saw that. I was like, wait a minute. Number one, it didn't. I'm in the industry, for crying out loud. I didn't freaking hear about this bill.
Agreed.
And I don't think many people have. But it does say that it says that transactions with international clients who purchased and sold U.S. residential property during a 12-month period of April 2021 and 2022. And it says that the top foreign buyers include Canada, who just put a ban, Mexico, China number 3, India, Brazil, and Colombia. These are the top buyers, foreign buyers of our real estate.
No, that's a very that's my first time seeing that article. Very interesting. I'm curious to see what happened when it went, to the House or the Senate or something.
Nothing.
Yeah, it's if they allow it, like, why wouldn't somebody? So it comes down to legislation. If anybody wants to change anything, like, that's the only way it's going to stop.
And that would be a fight in itself, right? How would they regulate something like that?
People with that type of money are smart, right? They'll just move money to a U.S., institution or something and then buy from the U.S. So it's just a complicated thing, right? The American dream, is everybody wants to come to America for the American dream. It's a great, economy. It's a great opportunity. And other people know that. So, people are going to take advantage of, whatever laws or opportunities there are out there. People ask me, do I, watch the news? Do I get into all that stuff? And I'm aware enough to pay attention. But at the end of the day, I can't change any of that, right? There's nothing I can do. So I got to play within the rules. And for me, playing within the rules is owning real estate. So, it's tough, because I agree. Houses are getting unaffordable. Prices are getting crazy. There's a lot of people can't afford it right now.
I just found this too. I wanted to just mention this while we're on that. And then, guys, what we're going to do is we're going to take some of your questions. We'd love to hear from you. Austin's here. He's ready to answer questions for you. And then also we're going to give you some tips. Austin's going to give you tips because he does buy houses at great prices. And I think one of the big things right now are, how do you negotiate if you want to buy? How do you capitalize when prices declining, sitting on the market longer? So if you're a wannabe homeowner, or maybe you're a seller, a wannabe seller, and you want to try and know what may be coming your way here with some kind of negotiation tactics from buyers. We're going to talk about that. But real quick, I just want to say, because Canada is not the only one that's, excuse me, Canada is not the only one that has put some type of real estate ban, banning investors. New Zealand, in 2018, they introduced, and by the way, I mean, the housing crisis, this is kind of like a global thing. We think that we're the only country that home prices have become unaffordable. It's all around the world. So New Zealand introduced something in 2018 where New Zealand's parliament banned many foreign investors from buying existing homes in the country. And it was designed to make homes more affordable for their citizens. And Finland, in 2020, foreigners outside of the European Union and the European Economic Area needs permission from the Finnish Ministry of Defense to buy real estate. So, I mean, here you go. I mean, whether something's going to happen here in the U.S. or not, I don't know. We'll see. But Austin, you said you never heard of these REITs and things like that. I mean, look, this is new, man. This new concept of everybody jumping on the real estate bandwagon, it's not new that people have been investing in real estate, but real estate's become so expensive. These big companies have said, hey, let's sell off pieces of real estate. Maybe we can, Jeff Bezos is even backing a company called Arrived, right? You heard about that, right?
Yep. I mean,
so anyway, let's take some questions and some comments here.
For sure.
We got Jeff here, Jeff M. Jeff, he's a regular contributor to our audience here. He's fantastic. Just about every week he's with us, has some great insight that he shares and asks a lot of good questions, but he's in for free speech. But I would be on board if the government banned the word pivot after 2022. Any comments on that?
That's funny. I mean, everybody's using that word. I almost used that word earlier, but I said adjust with the market.
Pivot may be a bad word here.
That's funny.
Do you think the Fed's going to pivot?
Inevitably, they have to. They ran up through COVID. They printed too much money. They gave out. They're still giving out money today from COVID. So they did that too quickly, and they pivoted too quickly, and both ways are going to get hurt from it. So yes, for sure. I don't know if it's going to be this month, next month, 6 months, or 12 months, but they have to. It's inevitable. You
say they're still giving out money from COVID. How? What are they doing?
Yeah, I mean, there's a program that exists now. It's called the Employee Retention Credit. Business owners that had W-2 employees in 2020 and 2021 can get a $26,000 credit per W-2 employee that they had on payroll. So if they had 10 employees, it's $250,000 in a physical check that they get mailed from the IRS. Wow. So, I mean, people are getting multi six figures, multi seven figures just for having employees.
Crazy.
Yeah.
Here we have Jakar. Let's see here. Columbia, Maryland. Man, you're in our backyard. I don't know. Have we heard from you? Have you reached out to us? We'd sure like to help you, but if you haven't already locked down an agent, Jakir, I guess it is. Sorry. Planning to buy a $500,000 single family home in Columbia, Maryland. Please suggest when I should start looking for purchase or wait 6 to 9 months. You just nailed one of the most competitive markets that we have here in Maryland. I mean, we cover about 9 different markets, major markets here in Maryland, 9 major counties. Howard County, Maryland is one of the highest demand areas that we have in our state. And that's because of our proximity to DC. I mean, we're not a very far commute to DC. And there's a lot, they're trying to make Columbia really a big city in itself. A lot of activity going on. It's a great place. And I mean, I would keep an eye. I mean, we're still seeing where, 5 to 7% adjustments are happening even in Howard County. So is that going to improve? I would say, look now, if you do see something in the limited inventory that's out there, because you can use days on the market to your advantage, and then certainly get all of your contingencies, home inspections. There's your opportunity to also negotiate for more savings and to protect yourself against what you're buying, which has been something we haven't been able to do in the last 3 years because contingencies were not allowed by sellers. But yeah, I would say, sure, look now. Reach out if you don't have an agent. We'd love to hear from you.
I agree. I mean, you can't ever time the top or the bottom of the market. So, would I go in and pay $100,000 over ask? No, that's not the market for this. So, I would try and find something, that's 20, 30, 45 days on the market, wait for a price drop, maybe get a little bit less than that. And like you said, like have all your contingencies, ask for, $2-5 in closing costs, whatever that looks like. I've been on the seller side, and we're giving more concessions now, way more than we've ever been done over the last 2 to 3 years. So yeah, I mean, especially if it's a personal house, like people confuse like investing in primary houses. I had trouble buying my house because I've never bought a house for retail ever. And I had to do it because Florida's a different market. It was a different market that we were in. But it's like, if it's for your family, if you're comfortable with the payment, that's the key. If you're okay with the payment, then, and you can plan to live there for 5+ years, then you're going to be okay. If this is a 12-month property, make sure you get a decent deal on the house because nobody knows where the market's going to be in 12 months from now.
This is true. And, I always say there's 3 kinds of buyers, right? There's a flipper investor, there's a buy and hold investor, and then there's a retail home buyer that is going to live in the house for, like Austin said, hopefully at least 5 years, hopefully 7 to 9 years, because, that definitely makes it a safer, bet. You can weather any kind of market adjustments and things like that. But obviously flippers need to buy it at the rock bottom price. They've almost been ousted in this market because there's little to no profit for them unless it's a really good deal and a really easy flip. And then your buy and hold, like Austin's getting more into, he needs the cash flow. So he can't buy it at the top, but he can pay more than a flipper too. And then obviously, the homeowner that's going to stay there ultimately, well, maybe we'll add a 4th layer to it, and that's Wall Street.
Yeah, agreed.
All right, let's see what we got here. So do you think it's a good idea to go to open houses on overpriced houses or make the sellers agents sweat it out?
A little bit of context on the question. If you're trying to make them think that it's overpriced, maybe play games. Again, like if somebody's 100% set on a house, don't play games. But if you're willing, like, yeah, this might or might not be it, then yeah, see if you can get a good deal on the property. Make an offer based on today's values and not 12 months ago's values. So it just depends on the buyer's mentality on that.
I went to an open house on Saturday with a client, Austin, and they came in from about 6 hours away. And, it's like, it's really in an area that is very remote, very rural. The price point was good. The house needed a lot of work. And, so I said to the people who were coming in, I said, look, the open house was 10 to 1. I said, well, let's get there at 9:30. We'll get there before the open house. We'll be able to still see what's going on. And then we'll probably be there at the beginning of the open house and we'll see what kind of activity is coming.
Yep.
So, I'm watching the house 4 days up to the open house. And, there were some showings. We can see some of the showings in our showing service. Sometimes if the agent sets it up that way, and most of them do. I don't. I hide all that stuff. But anyway, I don't want an agent to know that I have no showings, right?
For sure.
When I'm listing a house. But anyway, so talk to the agent. Yeah, we've had a lot of activity, whatever. But I think we'll have a good open house. Man, 10 o'clock rolls around and there's a traffic jam. It's like all of a sudden, boom, here comes the people, right? So we get in, we get out, and we notice some things. We write a very creative offer. We went to a coffee shop, sat down because they're from out of town. They wanted to write an offer. We wrote a very creative offer. We had a lot of abilities to get out, should we need to, with inspections and stuff. But they wanted to be pretty aggressive on even with an escalation clause.
Wow.
Yeah. We lost it. I mean, we had a pretty substantial offer. And I'm thinking to myself, man, these people. So me, the way that I think, I'm going, okay, well, let's not discount it yet because they'll be back. They may be back. Our offer was so creative. Once they get through the inspection, it may go back on the market. But to answer this question, people aren't making the agents sweat it out. But what's happening, and I can tell you what we're seeing, is when we have an open house, we'll get bombarded that first hour or so, and then it's crickets. So we will see every buyer that's in the market within the first couple days guaranteed. And if they don't get offers, then, man, you are sitting on the market. So a lot of it's pricing strategy. So when you say it's an overpriced home, if you truly know that it is overpriced, you won't have to make the agent sweat it out. Go see the house. It's going to sweat it out anyway because if it's overpriced, probably won't sell.
For sure.
Yeah. All right, let's go here. All right, here we go. Greetings. Could you please explain what is the meaning of buying down the interest rate? Many thanks as always.
Yeah, I mean, you probably done this a lot more than I have. I don't do it because it's a cash flow game. I try to keep money in my pocket up front. So, it's money out today to get a lower interest rate for the future. So if you're going to own it long term, sometimes it might make sense. Again, if it's short term, typically it doesn't make sense. I personally don't buy them down because as an investor, I'm trying to keep money in my pocket. But as a homeowner, it may be an entirely different story.
Yeah, and I'm not a loan officer, but I can tell you that my experience in dealing with buy downs and things like that, I know the new house market right now, home builders, they are buying down your rate for you because they want to sell their inventory.
For sure.
They're usually tied in with a lender, and there's, closing cost assistance and stuff like that. But I know that buying down an interest rate is very expensive.
Yeah.
I have seen, it's crazy out there. Rates are going nuts. I just saw 7.625% on a 30-year for somebody who had a higher debt to income ratio. And that came with 3 points.
That's crazy.
So they had to pay 3 points and 7.625%. So we are seeing the prices are up, but buying down a mortgage rate is very expensive. And one thing I want to caution you guys too, because here's what a lot of loan officers are doing. And I'm not a lender. If you're a lender, you may not like what I'm saying here, but a lot of times they say, oh, just don't worry about the interest rate right now. Date the rate, marry the house. Here's the problem with that, guys. To refinance, it costs money to refinance. And, so unless you're going to stay in that property for a very long time, it may not be advantageous for you to refinance because of the cost of refinancing, number one. And number two, you're going to risk that if the market takes a hit and the house doesn't appraise and you put 3.5% down and that house doesn't appraise, you're going to have to put more money down when it comes to refinancing. So if you don't have the cash, you're screwed.
Yeah. Yeah. If you are not comfortable with the payment today, that's a problem. Right. Again, it can be a date the rate, love the property. That makes sense if you're comfortable with the payment today, because nobody can control the future. No, everyone says, hey, the rates are coming back down. rates might not come down for 30 years. I don't think that's going to happen, but it's an educated guess. It's not fact.
So let me ask you this, because you live in a world, and I don't know how you lock in your financing, but I know for me, I was just looking at some of my loan statements because I'm always like, okay, when does this sucker, mature here? Because as a real estate investor, doing commercial loans, I'm locked in on some of these things for a 10-year rate. And, my rates are like 4%, 4.5% on some of these things. And I'm looking, I'm going, man, in August, this thing's up for renewal. So either one, I got to pay it off, right? It's going to balloon on me. Or number two, I'm stuck with refinancing this thing. So I'm looking at these notes going, okay, this can scare the living daylights out of you, man, when you have these adjustable rates, right?
Yep.
So, what's your appetite for that? Because a lot of people are saying, should I get an ARM? Should I do one of these adjustable rate mortgages? Because that's what the loan officers are pushing. Oh, do the adjustable rate now, and then you qualify for the whole thing now, but you can refinance it in 1 or 2 years. Maybe you can't, but what's your appetite for adjustable rate mortgages?
Yeah, I'm open to it. I wouldn't do like a 1 or 2 or 3 year adjustable again, because nobody knows what's going to happen over the next 1, 2, 3 years. So a lot of my debt is 30-year fixed. A lot of it is 10-year terms that are 2, 3, 4 years into it. So we got 5+ years till those pan out. Some of it's 5 years that have came into play over the last 1 or 2 years. So we have 3 to 4 years still left on those. The shorter the lock, yes, the more nervousness comes with it, I guess. I'm hoping come 2027, something happens with the rates. But let's say, they stay where they are today, and, my 5% goes to a 7. It's going to suck, but typically 3 to 4 years from now, rents will be up slightly to help cover some of that cost. Hopefully you've paid down a little bit of the debt by then. So, you can refi at a lower mortgage amount, which will then reduce the payment a little bit more. But yeah, I mean, it can stick you if everything goes poorly. So personally, I try to lock rates as long as possible, 30, 10, as much as possible. And if I have to do an adjustable, 5 years minimum, ideally 7 or 10 years. But I personally will not do a 3-year ARM because it is too close for me.
Yeah. Would you do it if you were buying a house to live in for your primary residence? You think that's riskier?
Perfect example. My primary, I just bought a few months ago. I have a 7-year ARM on it. So it's, do I wish I had a 30? Yeah. Do I plan on being here 7 years? No. I just looked at my personal situation. I don't want to be here for 7 years. Hopefully I'll be gone. And if I am here, hopefully rates are lower.
All right. This is a good one here. Danuska. Danuska is a longtime follower and supporter of our channel. Danuska was looking for a house not that long ago. I don't know whether I know you had contract on one and then you were going through inspections. You need to let us know what's going on with that. Did you settle? But she says, hi, Todd and Austin. Do you see any future for Airbnb single family investments?
Yeah, I do. Again, in the short term, when economies are going down, less people might be traveling. But long term, I personally prefer to stay in Airbnbs over hotels. I like my own place. I like having space. I like having multiple bedrooms so I can travel, friends or family. So do I think there's a future? 100%. But again, it comes back to basic real estate. Like location is important and price is important. So if you can nail those two things, if you're in the heart of the city and you're half the price of a hotel room and it still makes sense for you, like you're going to do okay. If you're out in the country with nothing, no benefits, no, bonuses, no nothing, like that might be a harder sell. So yes, I do see it in the future if it's the right properties.
What do you think, Austin, about all of these people that dove into the Airbnb business as investors and, they've never been a landlord. They gobbled up these vacation houses because they said, oh, this is a great idea. I can go and stay for free and rent it out and make money. And then they realize when they pay all these fees and, they pay a management company and the cost of cleaning and all that other stuff. Do you think we're going to see a big kind of like influx of inventory of this Airbnb?
100%. I will never and have never bought a Airbnb at market value today because I had Airbnbs through COVID. Every single reservation I had years, like in a year, months in advance, every single one of them got canceled. And I was like, oh, like this is real. This can happen. But my exit strategy is that though a lot of those deals would have worked as long-term regular rentals, and the ones that didn't, I had 25% equity in them because I went into them using the BRRRR method. So I had 25% of value that markets could come down, that I could pay out realtor fees, whatever that looked like. So personally, I will never buy an Airbnb at value today because there's too many unknowns. Would I quote unquote BRRRR into one? 100%. That's what I do. Because if you have 25% equity, like there's a lot of room for error in that.
Just explain BRRRR.
Yeah. So buy, renovate, rent, refinance, repeat. So, if it's worth 200 grand on the back end, I'll give you one. It was worth 550 on the back end. We bought it for 300. We put 100 into it. So we were all in for 400 grand. It appraised at 550. So then we cashed out refi, paid off our lenders, and we had $150,000 of equity in the deal that we own and we rent out on Airbnb. So if things were to happen, we have a $150,000 margin of error to at least break even and not lose any money because I didn't have any of my money in the deal in the first place. So versus buying it at 550 and then something going wrong and then selling it at 500 and paying fees, now you're, 50, 60, 70, $80,000 in the hole. So personally, no, I will never buy at market, but I will make an investment into one to build my own equity to then Airbnb.
And from a real estate investing standpoint, and I've always said this, there's two types of real estate investments, right? As far as residential, I mean, we could get into talking about big multifamily, but we'll just keep it to under 4 units or less is really considered a residential transaction. Sure. Once you get over 4 units in one building, in a house or a building, once you get over 4, really we're talking about commercial. So when we're talking about investors that buy like a 4-unit building or a 2-unit building, 3-unit building, or investors that invest in a single family house, I always say, if you're going to invest in real estate and you're just trying it out and you're not really in this full time, it's not your gig, buy the single family house. So if you're thinking about, Airbnb, single family house, and the reason is because like Austin just described, in the event that you get into the jackpot, I've talking all day, man, my voice is going out. In the event you get into the jackpot and you have to sell it, a single family house is going to be purchased typically by someone who's going to live in it. So they'll give you profit, right? As long as it's vacant, there's no lease and tenant that they have to evict. A homeowner is going to look at it and they'll give you, more money for it so you can get an investment. If you have a duplex or a triplex or a fourplex and you go to sell that because you're in trouble, you're going to sell that to another real estate investor that's going to be like waiting for you to collapse to come in and scoop it up. They want you to make no profit, right? Because the lower they can buy that for, the more money they can make. So if you're thinking about getting into doing, investments, real estate investing, buy a single family house to get started. It makes it very marketable in the event that you do get yourself in trouble and that real estate's not a liquid asset. I mean, you can't just turn it into cash. You can't sometimes sell it for a profit or to come out. But you can definitely increase your chances should you have something that you'll sell to a homeowner. Danuska did say before we get started, she said that she bought her house, she settled, and she's living in it. Congratulations.
Let's go. Congrats. That's awesome.
All right, here we go. This is a good one for you. Real Estate Mindset, Travis. We love Travis. If you guys haven't checked out his YouTube channel, he's dedicated to bringing you up-to-date information and current market conditions. Big shout out to Real Estate Mindset. Austin, have you ever had to evict a tenant Oh no, right? You've never had to evict a tenant. And if so, what was the process like?
Yeah, for sure. That is part of the game of real estate. It comes with the territory. We never want to get to that point, but inevitably it does get to that point. So as far as the process, you post a 3-day notice. Sometimes, very rarely, people will actually agree to move out. Doesn't happen typically. Usually you have to fight them. That's best case. You post a 3-day notice and they're out in 3, 5, 10, 20 days. Like that's a win, right? What happens is if they fight it and they don't move out, then you have to file an eviction. You got to go to court. You got to have hearings, depending what state you're in. Some people lean on the owner side. Some people lean on the tenant side. Judges lean versus owners. Judges lean versus tenants. I've had people get extension after extension after extension, months and months and months of not paying rent and allowed to stay in the property, because they told a sob story. And then I had to pay mortgages. I had to pay insurance. I had to pay property taxes, and I wasn't collecting any income, and they moved out and had to re-renovate the house. So it is part of the game. What I always say, like your first 1 to 10 rental properties, you're going to make profit. Sometimes you may be, a little bit in the red. If you get a bad tenant and they screw it up. Once you get to like 10 plus properties, sometimes, hopefully the way that you bought them and the cash flow, they kind of take care of one another. You can have a bad house, but then the other 9, help keep that quote unquote afloat and profitable. But the first 1 to 10, if you get something bad, there's potential of a slight, quote unquote loss on paper in the real life. But you always win long term in real estate. If you can hold it, nobody on this call, I think, would agree. 10 years from now, if you own a piece of real estate, you're not going to sell it for less than what you bought it for today. So if you can keep it, you can hold on to it long term. Real estate has been one of the best investments, over the last 10, 20, 50, 100 years.
There's a saying, and I'm just kind of adding my 2 cents to what you said for people that lose money. There's a saying, and first of all, there are so many sayings that we learn in life that are just, they're kind of funny, man. Not really true. But there's a saying in business that sometimes you eat the bear and sometimes the bear eats you. Have you ever heard that before?
I don't think so.
No? Man, maybe, I don't know. Maybe it's an older saying or something. I don't know. But, maybe because people got eaten by too many bears. There was a saying, if you guys haven't heard it, maybe you can chime in the comments if you're with me on this. But there was a saying that for years that I heard that sometimes you eat the bear and sometimes the bear eats you, meaning that it's okay to lose sometimes. And I always said, I don't know what it's like to get eaten by a bear, but I don't think you can get eaten by a bear too many times, maybe not even but once.
Yeah. That's real.
What do you think about foreclosures? You think we're going to have, we know this market's propped up. I mean, we could point the finger on so many different reasons on why. First of all, I've been in this business for 30 years, more than 30 years. I started in the housing industry as a contractor in 1989. You don't have to say it, Austin. It's longer than you've been around. I mean, I don't, but it's just the truth. But anyway, never in this housing industry have I seen increases so rapidly to home prices than I have in the last 3 years.
Yep.
But yet we have the lowest mortgage foreclosure rates as we've ever seen, or that we've seen. Even now, it's still lower than pre-pandemic. There are a lot of different reasons why we could blame the housing market for being on this rocket ride. One was stimulus and programs.
Yep.
And I think we've printed more money in the last 2 years than we have in the last 200 years. But when do we wake up, Austin? When do we wake up from this with a hangover? When do we start to see where the stimulus money runs out? I don't think the White House wants to see foreclosure come across their desks. Banks are trying to work things out. You can't tell me that people aren't delinquent. It's news. 64% delinquency year or foreclosure starts this year than just a year ago. When do we start seeing foreclosures hit the market?
As far as hitting the market again, it's a lagging indicator, right? Somebody falls behind on payments. It's 30, 60, 90 days before they get a notice. Then they get a notice. Then it has to go through the court. Then it has to go through the court. Then it has to sell at sheriff's auction. Then it has to sell at sheriff's auction. Then there's a redemption period. And then it finally sells back to the bank. And then they got to prep it and get ready to sell it. So it's a very long process for that to happen, which, might be coming over the next 3, 6, 9, 12 months. What I've already bought houses from people that can't afford their payments, from people that are physically in the process of getting foreclosed on. So, I've gotten calls from lenders, hard money lenders, builders. Builders have called me like, hey, like, we're going BK. Do you want to buy the inventory? Like, it's over. Hard money lenders. We foreclosed on more houses in the last 6 months than we have in the last 5 years. So it's already coming. Again, it's just a lagging indicator. The variable in play here is that, like you said earlier, you have so much money sitting on the sidelines, hedge funds, waiting for this to happen. So do you really think if foreclosures start getting listed at 50, 60, 70, 80 cents on the dollar, they're not going to get scooped up overnight? Like, I'll buy them. You know what I mean? Like, there's so many people looking to place money right now. Is foreclosures going to have a drastic negative effect on the value of homes? That's what's still TBD. And I think it depends on how many foreclosures come into play that will determine that over the next 12 months.
So, Austin, what can you tell people that are looking to buy a house right now? I mean, there are a lot of things, and you just touched on a whole bunch, and, we're going to hang out for another 10 or 15 minutes or so. Yep. For you guys, if you have any questions that you want to chat in. But we have a lot of people that have been sitting on the sidelines, a lot of home buyers that want to buy a house. They wanted to buy a house. They were outbid in the last couple of years. They didn't have the cash to go over asking price, over appraised value in a lot of cases. So then they were hopeful. And then all of a sudden, we saw the interest rates spike 7 times in the last 8 meetings that the Fed had in 22. 7 of those meetings, they increased interest rates higher than they've ever done, more rapid than they've ever done in history. Yep. It halted real estate sales. You're mentioning a lot of different things right now. People that were in a real estate investor, people are calling you and saying, hey, look, I'm going to be dumping these properties, or I can't afford my mortgage. Is there any way for a retail buyer to capitalize on strategies like yourself, what you do to find these good deals and, buy these homes before they hit the market? Any recommendations?
Yeah, I mean, a lot of the deals that I'm getting, opportunities on are still distressed. So, a lot of them can't get retail financing today. You could do a 203K rehab loan. I think that's what it's called. Yes. You could buy it, put a lot of your money into it. So, what I'm getting is that they're still distressed. So, for a retail buyer, it may not make the most sense. But as far as getting deals that do make sense, that, can be financed retail conventionally, I would definitely keep your eyes on the MLS. I've bought 2 deals off the MLS in my entire career, and I've done hundreds and hundreds and hundreds of deals because the MLS was just oversaturated. Prices were going through the roof. I know a lot of people that are closing deals weekly on the MLS right now, because from a seller's mentality, if their house is sitting on the market for 20, 30 days, like, that's World War III. Like, that's the end of it, because people are used to getting multiple offers in 24 hours. So a lot of people are coming in and offering $10,000, $20,000, $30,000, $40,000 less than what is currently listed at after a price drop, and getting their offer accepted. I've got calls from attorneys that are like, hey, my buyer feel like they already missed the top. They're trying to get out now before it goes any lower. So I think keep an eye on the MLS. You'll get a lot of opportunities in there, connecting with agents and, potentially foreclosure attorneys, short sale attorneys, people like that. I think those opportunities are coming. Joining Facebook groups, local Facebook groups. There's a lot of deals that get passed through there. So the thing that happens with investors, like investors have to buy the deal at a discount, right? Massive discount to be profitable. But if they get a deal, it's worth 200, the seller's asking 180, doesn't make sense for us. The only way it'll make sense is if another retail buyer bought it. So I've been on email lists as well, and I've been getting email blasts from investors that are trying to wholesale to a retail buyer deals now. So you could potentially come in there, offer to buy it, and there's you can't finance an assignment fee. That's a whole different topic. But take it at cost and just pay the wholesaler $3,000-$5,000. They're happy, you're happy. Now you got a property with $20,000 of equity in it. So, there's a few ways to get in there, but I think it'll become more and more prevalent over the next 6 to 12 months.
What do you think about subject to? Is there an opportunity for a retail buyer with that?
Yes. I love it. I think that's huge in the upcoming market because, 2, 3, 4% interest rates are like gold right now. I closed my first ever subject to deal like 4 months ago. But it's what the market bears right now. So, why not learn it and implement it?
Can you explain that to our audience? I mean, what subject to means and how might they find out about, people wanting to get out of their mortgage?
Yeah. So in the simplest terms, they bought a $200,000 property 3 years ago with a 3% interest rate, and they put 10% down. So 200 grand, now they owe 180. Over the last 3 years, that property might be worth 250 right now. And, they want to sell it, but they know it maybe needs a little bit of work, some paint and carpet, and they want to sell it, but there's not enough margin in the deal to sell it, or they just don't want to deal with selling it. So what you can do is you can come in and make an offer to them subject to their existing mortgage. So the $180,000 that they owe with a 3% interest rate that they pay $800 a month on, you can take it over subject to, which means that the deed gets put into your name, but the debt stays in the seller's name. So you want to make sure you're abundantly clear and you over disclose that because you don't want that to come back and bite you. For fraud or, non-disclosure, whatever that is. So be very blunt with that the debt stays in their name. And then you take over the debt, you make the payments on their behalf. And then you may have to pay them again, 5, 10, 20 grand, for them to have some money to walk away with, to be able to part ways with their property. Typically this works, in deals where the seller is struggling financially. Because if they have a ton of money, like why do they care about letting you take on their debt, right? There is some risk to that. But if they're 60 days behind, this was our scenario. They were 30 days behind on their mortgage. They can't pay for the mortgage. They needed cash today. And it was a 3.2% interest rate. So we're like, hey, we'll come in. We'll make you whole. We'll make up all your past payments. So we'll fix your credit score. We'll help it. We'll make it due. You won't get dinged on that anymore. You also won't have a foreclosure on your record for the next 7 years, and you'll never be able to buy a house again. And we'll make your monthly mortgage payment for you, so your credit score continues to actually get better instead of worse. And with that, we'll pay you $10,000, $20,000 because you need money to be able to move on. And they were ecstatic with it. They were very happy. But you just got to over disclose that the debt is staying in their name, the title is coming to your name.
Yeah, and it's risky for the seller too, because if the buyer doesn't pay the payment, so
Yep.
And then I guess the risk on the buyer is, and the mortgage, there's probably a due on sale clause.
Yes.
So when that title, kind of changes hands there, they're coming after, they could come after the property, I guess, to where you would have to then refinance it or, get that lender out, right?
Yeah, no, that is a very, very, very good point that needs to be discussed. So technically, anytime title transfers on a property, the mortgage is due. So when the title goes from their name to your name or your LLC or whatever it is, technically the entire balance of the mortgage is due to the bank. What typically, and I'm not an attorney, consult with your own attorney, but what typically happens is that as long as the bank keeps getting paid, they never really look into it. But there is a chance legally they are allowed to have a due on sale clause and make the entire mortgage due. So you would either have to sell it and or refinance it to pay off that debt. So again, I would never take on a subject to property at today's value. even if it cash flowed, even if I made $800 a month in cash flow, if it was worth 200 today and the mortgage was 200 today, I would not take that property. Because we were like, well, Austin, there's $800 in cash flow. Like, why not? One, things can go wrong. You can still lose money. And two, if the due on sale clause, you sell it, you lose money because you have fees. You refinance it, you have to bring 25%, $50,000 to the table to put as a down payment to be able to refinance the property. So I will only use that strategy if there's already equity built into the deal.
Yeah. I was talking to a real estate attorney because, when I guess it was probably a couple years ago, somebody had mentioned this subject to stuff. And I'm thinking to myself, this has got to be legal. But so we had a real estate attorney come on the show and he said, no, there's nothing illegal about it. At least here in Maryland, he was a Maryland attorney. And he said, was warning about the due on sale clause and the risks that were involved. But it's not illegal. I mean, if anything, and he also said that if the payments are being made, the chances are, he said that bank's never going to say anything about it.
Yeah.
Because they just want to get paid as agreed. So we'll take a couple more questions here. Let's see here. All right. Guys, we appreciate you watching. We appreciate Austin for his time tonight. We're on the East Coast, so it's late here. We've been working since early morning hours. Todd, there has been zero talk about the Fed pivoting because they cannot service their own debt of $31 trillion. The pivot, for that reason, would take the market as well. And his opinion, thoughts, Jeff, thank you. Dental coverage for you. Thoughts on that?
I don't fully understand the question, but I haven't heard of talk about that. But I think inevitably they will have to pivot at some point. I just have no idea when.
Well, I mean, I think the big issue is right now, and the government can just print money. I mean, it's
as we've seen.
You and me, we can't. I mean, that would be bad if we printed money, Austin. We're not allowed to print money, but the Fed can print money. They can make it happen. We've seen that, and it's kind of a unique scenario because I've never seen anything like this play out before. I've never seen so much money in circulation before. And they have to get rid of the money that's printed. Right? They have to bring it back in somehow, shred that money, get it out of circulation. If, I don't talk politics on the show, but it's kind of like one of these situations where I wouldn't want to be the Fed. I wouldn't want to be Jay Powell. I mean, gosh, man, it seems like no matter what happens, it's a kind of like a no-win situation. You keep the pressure on to drop inflation. And then, the snowball effect, the crash in the economy. I don't think there is any soft landing. I think we're going to see that in months to come.
Yep.
Wells Fargo just announced today. I mean, they had a big announcement and, getting kind of out of the mortgage business a little bit, or stopping mortgages, a division of their bank. That just came across my desk this evening. We're looking at consumer debt being outrageous. More consumers are financed to the hilt than ever before. I mean, credit card debt's outrageous. But so if they ease off of this interest rate and sort of back it down, will that allow prices to just continue to soar? Yeah. So it's kind of like one of those things on, man, it's a mess.
There's no right answer here. I agree with you. I would not want to be the one making that or announcing that decision.
No way. No way. Well, we appreciate you guys for watching. Austin, we thank you so much for being on our show again. Great information.
Absolutely. This was fun. I appreciate the opportunity. Hopefully people on here, got value from that. And appreciate you having me on.
Yeah, man. So we thank you. Until next time, guys, thank you so much for watching. Have a great week. See you soon.